Hello, everyone. Welcome back to another episode of B&A Panorama Podcast, episode 17 now, getting down there. And today we're going to be talking about, are we stuck in a bubble? And by that, I mean the market bubble. And will it pop or will we keep floating on up? And we're going to kind of go off and read some of the indicators of a bubble and try to give some examples and some statistics of what kind of, could mean for us in the future. And at the end of it, give us your opinion in the comments and see if you think we're right or maybe we're just, due for more money in the future. So start off by reading the 5 stages of the bubble, huh? The 5 stages of a bubble. The first one is displacement. Displacement occurs when investors get enamored by a new paradigm, so a brand new innovative technology or interest rates that are historically low. And a great example of this right now is clean energy and electric vehicles.
Yeah, they're overvalued and they don't have enough sales to back up the worth of the price. And clean energy. There's a iShares Clean Energy ETF that rocketed up, and now it's kind of settling at about $23. But they're a little bit overvalued, and I think clean energy is the future. But I also think that right now it's overvalued, much like the .com bubble when all those tech companies were, because it was the future. People were right about that, but there's too much of a rush. I don't know what other examples you got, but that's my opinion on. I think the first stage is we're already through that for sure.
Oh yeah. I mean, if you look at all the clean energies right now, back when Biden took presidency, there was a giant surge of every single clean energy stocks. He announced, I thought it was like a huge deal to make that the future. So everyone jumped on board and they're like, all right, I'm investing right now a ton of money into clean energy, solar energy, electric vehicle companies to get on board with it right away. But there's just not enough, products being made and not enough output to value or to give fair value. It's all
And some of these
overvalued.
businesses aren't ran very efficiently, and they're just getting loans just because they're clean energy. And we're trying to the government's trying to, what's the word for it, foster these companies, so they're going to help them out even if they're poorly ran, which is what we're seeing is the case in some of these. So I think we're going to see a rise, and just like always, when the crash happens, the super strong energy companies are going to go up, and the ones that were mediocre, poorly ran, I think are going to go way down. So
They're definitely going to wheedle out the weak. Anything that wasn't top priority is going to, kick the bucket.
yeah, that always happens. So
I think Tesla is a good example of that too. I mean, I don't know if you think it's overvalued or not, but their clean energy with their cars and, Tesla is definitely making huge strides.
yeah, I
And
think they're one of those that they do follow the market trend. They'll go down when it crashes. The whole market might not crash, but let's say electric vehicles do. Well, they're still one of the best, and I think they're one of the best managed. So even though they'll go down, they'll still go up. But some will go out of business, is my point. And Tesla's not one of those that's going to go out. They are I think they're overvalued. They are too. Their price to earnings ratio is skyrocketed, but in their future, they could live up to that. That's what people are betting on. But I think it's going to balance out like it usually does. What's the second stage?
The second stage is the boom.
The boom.
So the prices will rise slowly at first, following the brand new innovation displacement period, and then gain momentum as more and more people start to enter the market. And during this phase, the asset in question attracts widespread media coverage. So GameStop would be a great example of that. I mean, it doesn't get any better than that for an example. And FOMO, or fear of missing out, it could be a once in a lifetime. Exactly, once in a lifetime opportunity. And so speculation starts to skyrocket, and people who might not even been investors before, they'll jump on and go, "Oh, this is my time to get in and make, my life savings in 1 week off of all this crazy stuff." Yeah, I mean, for us, we kind of got lucky with Doge. But
yeah. No, actually, it's I would mention something. I think at this stage, I'll be cautious, but for me anyways, it was a good time to collect my bag, but I also wasn't going to just hang in there and go, oh, well, I can make this much more. It was like, I understood, all right, I made my money. Let's take the, take the dubs and then let's just rotate it and other stuff that's more sustainable. But
Especially, yeah, I mean GameStop too. I know a lot of people who, they came into the locker room, big football guy. They came into the locker room and this one kid goes, "Yeah, I just made $4,000 last week from GameStop." And I'm like, "What the hell? Like, I gotta look at this." And by the time you look at it, it's usually over because the boom is that fast. If
well,
you
and this
aren't,
is weird because this isn't following any market principles though. Like GameStop's not a very good business and everybody knows that, but it was more so they were sticking it to the hedge fund people.
Mhm.
And so it's a really unique market situation. And I read an article that said back before the notorious 1929 boom, when the shoe shiner boys are talking about the market, it's a good indicator that it's kind of,
Oh
there's some
yeah,
kind of bubble of some sorts. It might not be the entire market. I'm not going to claim that. Nor am I trying to scare people actually out of pulling money out of the stock market, because as we'll talk about later, when the market, if the market dips, for me anyway, this is a perfect time to
get in.
really cash in. Like
Yeah,
the people that are smart will just make more money off of the dip. So it's not even a bad thing or a reason to panic, but it's just a reason to be financially smart about what you're invested in, and to make sure that you're not just following the hype train of, well, I mean, and again, yeah, I did follow the hype train of Doge
yeah.
100%, but
Hmm.
I also invested in it before when it was like under a cent, and now it's at like 7.5. But again, I collected my bag and got out, and I support Doge, but
Yeah.
just be smart.
It's still in
Don't.
that. I mean, it's in that boom period right now again. It
Yeah,
just hit it again. Went from
yeah.
5 cents to seven overnight.
And I think crypto will, I even in the market crashes, I think it will go down, but I think crypto will bounce back. I don't think it's gonna just crash and never come back. Like but again, I think this is gonna be another example of only the good crypto will stay, or the ones with the biggest followings. So honestly, it's crazy, bold prediction here, but I do think Doge actually has enough reputable people backing it to actually sustain a market. I mean, Mark Cuban's accepting it into. Oh, by the way, I own like 27 Doge, so I have actually nothing into Doge. So this isn't me trying to pump it, but
Yeah. I have
not
like
that we
three.
have that power. But
Yeah. We're gonna make everyone start
yeah,
pumping it so we can pull out and make our bag. No, I have like 300 Doge, so made $2 off of this boom.
yes,
Big money moves here.
yeah,
So the next stage here is Euphoria. And during this stage, caution is entirely thrown to the wind as asset prices skyrocket and valuations reach extreme levels during this phase as new valuation measures and metrics are touted to justify relentless rise. And no matter how high the prices go, there will always be a market of buyers willing to pay more. And I mean, no one's going to be willing to pay Doge after it booms. A lot of people got suckered into that in the first. I mean, GameStop and Doge, it went up to $300 for GameStop, I think it was, and then Doge hit like 9 cents. And at that time, people saw it going overnight, like literally 5 cents overnight. And you could make, if you put $1,000 in, okay, well, I just made, $900. Like I should be doing that right now. It's going to keep going. And the matter of fact is, once it's going up that high, people aren't going to be able to continue affording that.
yeah.
I
Well,
mean,
and people just sell off because, well, the next stage is actually people do start selling off their gains, and then it doesn't take much, but it may be a little bit of a downward trend, and other people panic, and then it just creates a group sell. And well, look at COVID in last March. I mean, look at the market. Did people panicked? And I mean, people were selling their retirement savings because they were, and just can't believe it, but it happens every time because it's an emotional thing. So
yeah, you can't get emotionally attached. Once you start doing that, you're going to either you stick onto something when you shouldn't, like you need to sell it when you're up and you hold on to it and then it goes back down and you're, SOL,
well, I
or
got
you
another example is another bubble that actually kind of almost already a little bit like popped is the SPACs that the SPACs, the special purpose acquisitions. They a lot of people were putting a lot of money in some of these companies that didn't even have a deal done at all. Or I'll even take Churchill Capital. So right now their stock price is not horrible, but it was $60 before they even merged the deal.
Mhm.
And then when all the SPACs went down, it also followed. And so I think that's a microcosm of what some of the market sectors are going to look like. It's going to go skyrocket. And then when there's going to be a time when they realize the valuation does not meet what the company is really putting out. And then there's going to be a correction, or at least I think there will. But another thing that we were talking about too is if you look at the S&P 500, the 100-year chart, you'll see that we are really just in like a parabolic upward stage. And I think there's a couple things that are going on there. Number one, there's a bunch of people moving their retirements into investments as opposed to pensions. So it's all getting moved into 401ks and mutual funds. So the S&P is of course going to go up with that because there's a bunch of money being pumped in there. So that artificially inflates the market then. But I don't know how you can keep doing that. Like eventually it has to correct it a little bit. So
Mhm. And not to say that it'll not like it's gonna destroy itself and
yeah.
crash all the way to the bottom, but there is going to have to be a correction. I mean, it can't everything has to be balanced, really. You know, if you're gonna eat the cake, you gotta eat the vegetables too. And right now we're eating all the cake, and sooner than later, there's probably gonna be a time where whether we want to or not, the vegetables are gonna be served.
And just like real life, vegetables are good for you.
Yeah. And
So it's a
yeah.
good thing.
Mhm.
There is benefit to it, even though it doesn't taste as good and it's sometimes bitter.
Yeah. Might lose a little bit of money, but in the
Yeah.
long run, it's definitely important.
Yes.
So yeah, I don't know if I said the next one, but
Page
profit
4.
taking. Yeah, profit taking here. And this is the biggest warning sign that the bubble is about to just absolutely burst. And people just start selling like crazy, or it doesn't even take a bunch of people to start selling, but a small amount of big investors to pull out.
Mhm.
And it's not necessarily that the number drops, but the message that is sent by it. And I think that's kind of a reverse of what happened with I'm going to use Doge again because very well versed in that.
Well,
But
and it's also like a interesting market phenomenon that's going on right now.
and it it jumped up overnight to I want to say within 1 day or 2 days it went up 8 cents, then dropped all the way down that same night 5 cents.
Yeah.
So it still held, and the reason it held is because the people that didn't sell right away at the top, they're holding on to it, hoping it goes back up, which it is right now. But those people that were like, okay, this is way overvalued, they see nothing from it, they just got in, take their profit, and leave. And GameStop was probably a better example of that, where the people who invested in that like a ton of money, and they're smarter, and they're not just the YOLO Robinhood investors who throw all
Retail
their
trade.
yeah, retail traders who throw all their money in. They know it's overvalued, and there's absolutely nothing to be gained from it being this high up. They're going to take their money and run with it. And the people who stay behind and don't take the message,
Holding bags.
yeah, it's going to correct, and you're going to be holding your bags, and they might start slipping if you're not careful.
Yeah, or you'll panic and then sell what little you have left. It's like, well, first of all, make sure well, for me anyways, make sure you're invested in things that will hopefully sustain market fluctuations, which is why people say what you invest in, believe in. So whatever company you invest in, believe in that company can survive uh, the market. So I know some people are buying Neo, which is another electric vehicle. And I understand that one a little bit more actually, because the Chinese government is, of course, authoritarian. So if they want to push electric vehicles, by God, they're gonna do it if they want. So if they're gonna support a company, like it doesn't matter what the market does, just China, like they can do whatever they want. So things like that aren't always. I would say it's somewhat smart, but also be cautious that the companies ran right. But that's of course an international company, but when the U.S. market drops, I think everything drops. So
Yeah, everyone feels the pain there,
yeah, and
regardless
then
of where you're at.
there's the last stage too. Here it's
Yes.
bag
And so the last
holding.
stage is panic.
Yeah,
And it only takes a relatively minor event to prick a bubble, but once it's pricked, the bubble cannot inflate again. And in this stage, all the asset prices reverse course and they'll descend as rapidly as they ascended. And all the values are going to start plunging in their holdings. Everyone wants to liquidate at any price whatsoever that they can, and supply overwhelms demand as asset prices start to slide sharply down.
And that's how it happens.
Mm-hmm.
So for, I think, even the March market, it took the COVID, which was by no means a little prick. I mean, that was just all businesses shut down, boom. So the market will bounce back like it always does, and that's where people, that when it goes down in certain sectors, there's going to be some companies then that are actually going to be undervalued, which is what commonly happens, which is a good thing for those that are paying attention.
Yeah, I mean, the biggest thing about it is it's not a the end is nigh. We're not that guy in the end of the on the end of the street, the
Yeah,
homeless guy saying the end is here. Everyone, like, get everything you can and hunker down. We're not trying to do that, but I mean, I won't speak for you,
be
but
weary.
be weary. There's definitely danger to be had in the future that could possibly, if you're not smart and you're not paying attention, things can definitely start to hit the fan quick.
Yeah, and
And
also don't panic when it's gonna eventually happen. Whether it even happens this year in the next couple of years, there's something's gonna happen like that. Don't panic and wait. Just
mhm,
be patient. It's so hard though, because when you got skin in the game and it hurts.
it
Some things you
does.
do need to. I think it's also interesting because some things you do need to know when to count your losses, because there are some companies where you're like, whoa, like bankrupt or just not a good business model. Like, I need to get out of this and rotate into something else. So
Mhm. And yeah, rotation is a big thing too. I
it's
mean,
a good thing. Yeah.
yeah, because when the market starts to drop and if the bubble does pop, that is a good time to buy
If there's a bubble, by the way.
if there is a bubble to
There,
pop.
that
Yeah.
no, those are the 5 stages right there. Read off the 5 stages, like
Yeah.
just for a refresher.
So the 5 stages are displacement. So a brand new technology or something is introduced. The boom period where everything starts gaining momentum and going upwards. Euphoria is where all caution is thrown out the wind. 4 is the profit taking stage where everyone's rolling in the dough and getting their money. And then the fifth one is panic, where it starts to set in, man. Everything's
It can
starting to
only
go
get
down
valued
now.
so high before it recorrects.
Mhm.
And yeah, and that's not necessary. And again, I've made this clear, but I don't think that this is a reflection on the entire market. I don't think the absolute entire market's in a bubble. I do think there are some indicators though that there are some some companies are overvalued right now. So
I mean, professional, semi-professional opinion. We've talked about how the future is going to be clean energies.
yeah.
Like, we do believe that in the future, clean energy is the way to go, and electric vehicles have shown that they are going to eventually be the way to go. But right now, those sectors, there's many companies and shit like stocks that are way overvalued what they should be.
Mhm.
Their output and their, you know, production and everything they're doing isn't justifying how much it's actually worth. And we're going to see it, you're going to see it correct. It has to, I mean, it's not a matter of will it or not. It's inevitable that eventually at some point it's going to correct unless they catch up in time before it starts to pop.
Yeah, which is a possibility. Which is, and there's some indicators. Ray Dalio's indicator for the market indicates a 77% chance of a bubble in 2021, and the crashes of both the .com and the 1929 were 100%. So I mean, there's still some space, and there's some things, like I said, it's not the entire market,
Mm-hmm.
but there is, for whatever that's worth. Neither of us are financial advisors, by the way.
Don't.
Yeah, and so I know nothing what I'm talking about. So please don't ever spend money based on, yeah. That's
So
how I don't want to be legally responsible for your poor decisions. But these are just like our recommendations that we found. So
we're gonna have some
take
person
what you do.
comment and say,
Yeah.
"I
I've
pulled
lost
10.
my
I
entire
pulled.
life.
I pulled all my money out, and it skyrocketed in the next 5 weeks because you told me it was gonna pop."
Yeah, I always think it's funny when people are like, first of all, I'm not a financial advisor. Second of all, I have no idea what I'm talking about. So yeah, people always make that clear. So
Mhm.
because there has been lawsuits, or it's just crazy that people can get sued, and it's possible because you can be legal or legally responsible. So
Yeah.
we're not legally responsible for any actions that take place after this conversation.
Yeah. I, Brand Steinhauer, am not a financial
Yeah.
advisor. I will take no legal obligations to this for what I've just said. Please take it with a grain of salt and know that I'm not a professional.
Anyways, if you do think we're in a bubble, let us know in the comments. We'd love to hear everybody else's opinions and see if those stages match up, or if some of these things aren't necessarily as surface level as they might appear. So let us know what you think, and thank you for tuning in for another episode. We'll see you again next week. Be great and be built different.